lot of people think the more credit you get, the worse your score is going to be.
Mm.
It's completely false. A lot of people think that if you have high utilization on any credit card, your score is going to suck. No, business cards, you can do that and it doesn't report. That's the big thing that blew my mind from the beginning. Business credit cards do not report to personal credit.
Wow. What's going on, guys? Welcome back to another episode of the Austin Zaback Show, and we're so happy that you're here. Today we have a very special guest by the name of Jack McColl. Now, he's actually written a book, which I have right here, and definitely going to have to check this out. We were talking about it a little bit before the show, but this is a guy who's helping hundreds of people, if not thousands of people now, around the country figure out their credit, okay? He's mastered the credit card game. He's mastered just the credit game in general, business credit especially, but really all types of credit. And here, which we're going to dive into in a little while, he's got a big book of credit cards. So I'm excited to jump in and just talk to Jack about how he got to where he's at, why he believes that people should know more about the world of credit, really, and how to do it the right way. And for me, for so long, Jack, we were talking before the show, I didn't know what the heck I was doing with credit, so I did it the old-fashioned way, just the, cash, right? You got to pay to play type of game. So I appreciate you being here, brother.
Awesome.
Yeah.
I'm really happy to be here. And really my goal on this podcast is to give as much free value on building credit, getting access to business credit as possible. And it's really crazy because you can get approved for hundreds of thousands of dollars at a 0% interest rate with the right strategies. And so I want to empower all of our listeners today on as much of that free value as possible.
I love that, man. Yeah, I'm excited to jump into it. So, Duke, you wrote a book, which is incredible. I told you, I'm like, I got to write one, and I love that. And you've got a ton of authority in this space. So take me back in time a little bit. Like, how did all this come about?
Yeah, I mean, the thing about credit is it's a lifelong journey. It's consistently building over time, and the stronger your credit profile gets, the more you can do, the more you can borrow, and when you can borrow more, you can do more. You can start more businesses, you can scale your businesses farther, and you can just have more purchasing power for different investments. And so I've been an entrepreneur for 8 years, and this first 6 years of entrepreneurship, I had no idea about business credit. I was using some personal credit cards, I was using cash just like yourself, but I had no idea about business credit. And I don't blame people for also not knowing, because I was in the same boat. I had no idea until someone showed me how to get a business credit card, and it completely changed my life. Because business credit, those accounts don't report to your personal credit profile. So this allows you to get approved for hundreds of thousands of dollars, and those accounts are not reporting to your personal credit profile. Therefore, the utilization on those cards don't affect your personal credit score. So if you max out your personal credit cards, it's going to tank your score.
Which I've been there.
Yeah, right, me too. But on the business card, say, for example, you get approved for a $75,000, 0% interest Chase business card. You can max that thing out, use that money for a real estate deal, and your score, your personal credit score, is completely unaffected.
Wow.
So once I learned that it was two separate things, personal credit and business credit, it just opened my eyes to see what was possible.
Yeah. Why is it, do you think, people aren't educated on credit? I mean, you said a little while ago, like, I feel like credit is like your report card to life.
It is.
Right? Like your credit score. It's like, are you an A student? Are you a B? Are you a C? Or are you like a D, which is like a 400, 500 credit score, So how come people are so uneducated?
It's not taught anywhere. Like, I studied business at University of Washington, a pretty good school. I didn't learn a single thing about credit. Not a single thing. This is something that every entrepreneur should be taking advantage of, and most do, but you have to be proactive. You have to figure it out yourself. You either have to get a mentor or make the mistakes yourself. But it's just like, you go to school and you don't learn anything about taxes. That's something every single person in the country should know how to do, but they just don't teach it.
They don't.
So I'm not sure if they want people just to fall behind and not be ahead. But I'm here to empower people so they can be ahead and they can use debt to their advantage. Because debt is a tool. You can. There's good debt and there's bad debt. You want to be using debt into things that are appreciating, cash flowing, ultimately going to put more money in your pocket. So it's a very, very powerful tool. You just have to know how to get access to money and know how to use that tool. And you don't have to have money to be successful in business, but you do have to have access to money. And I found the easiest access to money by far is through 0% interest business credit.
I love that. Yeah, and you mentioned like talking about, knowing how to use debt, right? And not like debt's not using you, you know? And because you hear dudes like Dave Ramsey, right? Where like, you know, and I'm sure you could
Funny
talk
guy.
right, where at least he says, you know, that it's probably a huge marketing ploy. But you know, he's like, hey, like pay cash, right? Like buy everything in cash, like, you know, don't pull out a mortgage, don't blah blah blah. Maybe he's changed, but that's a long time ago. That's what he used to say. But you know, then obviously you do take Grant Cardone for example, right?
Yeah.
Like friggin' use debt to the highest possible extent, you know. And I think you said it best. So it's about knowing how to use the debt so that you're not using it the wrong. You know, a lot of people use debt to go buy things that they wouldn't otherwise buy.
Not smart.
Right? Not smart. That they would never swipe on a debit card, yet they go take their credit card to buy it, right? And that very thing is something they didn't need to begin with, right? In no way, shape, or form, they didn't need it. And they can't afford it. They can't pay it back, right? And a lot of times they're buying it to impress people. And we've heard the quote that they don't like and that don't like them, right?
Right.
And so how did you learn, like, you know, what debt should and shouldn't be used for? Like, maybe you can elaborate on that a little bit. Like, what are the things? Is there a formula?
I mean, very clearly, if you're spending money or using debt into something that is ultimately going to pull money out of your pocket, it's bad debt. If you're going to put the money into something that appreciates or cash flows or puts money back in your pocket, that's good debt. So if you're using the debt to start a business that's going to cash flow, that's good debt. That's a good thing to do. If you're going to buy real estate property that one, cash flows, two, appreciates, that's also good debt. And so there's a very clear line of what that is. And I think for any entrepreneur to get a bump of, $100,000 to $200,000 can jumpstart any single business. Any person in a real estate career that's trying to flip properties or buy and hold or whatever in real estate, you can use that money as a down payment on a house, cash out, refi in a few months, use that same amount of money to then roll into a second deal. And so, a lot of people for, early stage entrepreneurs, they don't just have an extra $100,000 laying around. But if you have a strong credit profile and it's not that hard to create, then you can snap your fingers, get approved for $100,000 at 0% interest for 12 to 20 months, and then use that money to start that business, scale your business, or literally invest into anything. Because we actually show people on how to liquidate the credit into cash for a very small fee, and then you can use that cash for real estate, crypto trading, whatever you want.
Yeah, I love that. No, and then you're building that report card too, right? Like, I had a lender tell me the other day, I was working on refinancing one of my rental properties, and she's like, hey, Austin, I can't remember what the number was, but anyways, she's like, hey, if you get one more rental property, I don't know what the number was like in that entity of how many I needed, but anyways, she's like, we can give you like a $2 million line of credit, right? If you add one more property to like that portfolio, right, that I was building, and but similarly, that reminds me of like building your credit and your credit score. It's like a relationship, right? And and the more relationships you have, and the better relationship you have, the more opportunity that comes your way, I feel like.
Absolutely. I mean, even simple things like getting approved for an apartment. I just got a new apartment in Beverly Hills. They looked at my credit. The guy was basically drooling over my credit. I have an 810 credit score. And, some people also think the more credit you get approved for, the worse your score is going to be. It's actually complete backwards. The more credit you get approved for, the more accounts and aged accounts, those are going to strengthen your credit profile. And so when you have a strong credit profile, you can do things like get nicer cars, get nicer houses, get a better rate on houses, get apartment approvals, things like that. And then you can get the best credit cards. The best travel cards would come with amazing benefits, amazing free perks. And then you get approved for, I keep saying this, but a few $100,000 at 0% interest.
Right, which is nuts.
It's nuts, dude. And it's a pretty simple process. One, you want to start with optimizing your personal credit profile. So you're looking at how many accounts you have, how many recently opened credit accounts you have in the last 6 and 12 months, the amount of hard inquiries you have, the credit age, and also the size of your limits. And so one of the mistakes I see people make a lot on personal credit is one, applying for cards too quickly. If you apply for too many personal cards too quickly, it looks riskier to the lenders, also reduces your average credit age.
Interesting.
And so you want to be applying for personal credit cards at the grade A banks like Chase, American Express, US Bank, Bank of America, because those personal credit cards are going to help you build a relationship with those banks. So by the time you apply for those 0% interest business cards with those banks, they trust you more.
Right.
And there's specific cards at Chase and American Express that are known to give very high limits. So you want to be applying for those cards first so you can build your comparable credit. Because if you have more personal credit limits, you're going to get higher business credit limits. So main mistake people make on personal credit, like I said, applying for too many cards too quick, applying for not the high limit cards, and then also applying for cards at banks that don't have 0% interest business credit products. So basically,
Gotcha.
so quick example, Citi, for example. Citibank does not have any 0% interest business credit cards. So getting a Citi personal credit card, maybe you'll get a sign-up bonus, maybe some rewards, but that Citi card is not building a relationship with a bank with the 0% interest business credit card products that entrepreneurs like me are looking for.
Gotcha. That makes all the sense in the world. So obviously, I would imagine then the recommendation, right, is that, hey, if the day people that turn 18, like, go build your credit, right?
100%.
You almost have to.
First thing you want to do, sorry to cut you off.
No,
First thing
you're
you want to
good.
do is get added on your parent's card as an authorized user, because that's going to create a credit profile.
Before 18?
Or
Do you have to be 18?
That's a good question. Definitely at 18,
Okay.
that's the first thing you should do, because that's going to actually create a credit profile, build a score for you. Once you have that score, then you can get approved for other cards more quickly. I like to recommend 2 authorized users. Basically, you can get added onto someone else's credit account, and then that account is going to report to your credit profile, not as a primary, but as an authorized user, and it's going to increase your average age, and it's going to bump your score up. So that's one of the first things you should do, and then you want to follow the credit card hierarchy. Go for the more elementary cards first, like the Chase Freedom Unlimited. That's a good first card to do first, and then
Work your way up.
work your way up.
Okay.
Yeah. You
And
don't want to swing big off the bat. Work your way
So
up.
there's a strategy to it then, right?
For sure.
So if you're brand new, somebody who, let's just say they just turned 18 or whatever, I think there's a misconception out there that they have bad credit. But the reality of it is they have no credit.
Yeah, exactly. They have a very thin credit profile. And so some people will think like, I got a 720, 750, I got great credit. But a score is much different than the actual credit build. You want to look at the credit report, see how many accounts that person has, what's the highest credit limit, what's the total collective limits of the primary accounts, what's the average age, the hard inquiries, payment history.
Wow.
All of that is incredibly important and much more important than just a score. A score will put you in a category of being able to get approved for certain credit products, but when the underwriting team is looking at your credit, they're looking at this build.
Right.
And so you want to get multiple accounts, you want to get the high limits,
Yeah.
and you want to increase your average age through AUs.
That makes sense because I remember I'm a big car guy, right? And a lot of my cars over the years, up until recently, I financed a lot of them. Like when I was a little bit younger, the Mercedes and the BMWs and all that junk when I was growing up. And I remember they always told me, they always said, Austin, like for example, the automobile loan is different on your overall credit build, your credit profile, right? Like the automobile is like its own category. Then like maybe, a mortgage or a credit card or whatever, right? Or a student loan or whatever. And they would always tell me, they would say, Austin, you got to start with a small auto loan and then you can work your way up. And they told me, they're like, your next auto loan, and I don't know if this is accurate or not, but they said that your next auto loan can never be more than double what your previous the biggest loan ever was. So like if I had a $50,000 loan, I can never go from like 50 to 150. I have to go from a 50 loan to a 100 loan to a 150 loan. And that would be like the maximum in a perfect world, right? If the bank really liked my overall profile, I guess.
For sure. And that just goes back on comparable credit, right? What's the previous loan limit that you've had? They're going to look at that comparable credit and then allow you to get the next loan.
Gotcha.
So it also reminds me, an important part of your credit is the credit mix. It's how diversified your credit profile is between revolving accounts, which are credit card accounts, installment loans, auto loans, mortgages, things like that. How diversified is that mix? So you don't just want revolving accounts. An auto loan is going to help you build credit over time. A mortgage is going to help you build your credit over time. It will affect your debt to income ratio, but it will strengthen your diversity of the credit mix. Another thing you can do to diversify, there's something called a pledge loan. And a pledge loan is a way where you can add money to a savings account, and then you can take a loan against that savings account and pay off 95% of it. Therefore, it's going to report a personal installment loan on your credit that's 95% paid off.
Wow.
And so that jumped my score from an 800 to an 826.
Wow.
Which was massive. And at that time, I only had revolving accounts and an auto loan. So to add that personal installment loan just diversified the mix and also showed that it was 95% paid off.
Sure.
And I was using literally the loan against my collateral. So it was like no out of money pocket.
Yeah, so there's all these like different strategies, right, for building your credit, and there's even a strategy I've heard for people that are younger to do like a secured credit card in the beginning. So does a secured credit card for somebody who's maybe like 18 watching the show, does that build your credit profile?
It does for sure.
Okay.
Yeah. If you have bad credit, if you're new to credit, getting a secured card is a very good way to go. I like to recommend them at the grade A banks like Bank of America and U.S. Bank has 2 good secured cards, because that way you start to build that trust with that grade A bank, so you can get approved for their next cards much better. And there's also secured cards that graduate into an unsecured card. You want to look for that as well.
Gotcha. Okay, so so literally there's like a process to. They tell you that up front, I would imagine. Like that's kind of the journey of getting that card.
Yeah, some cards don't graduate, some do. You want to find the ones that do.
Gotcha. Okay. So you mentioned like the Chase Freedom card being like a good beginner card.
Chase Freedom Unlimited.
Chase Freedom Unlimited. So what would be like, maybe a couple of examples? Would you like Chase Bank? Are they a good one?
They're the best. They're the king.
What do you think of Wells Fargo credit card?
I do not like them.
I hate them
I don't
too.
bank with them. I don't like them. Their lending is strict. I would avoid them.
Got it. Okay. Yeah, I have a couple of Wells Fargo cards and I hate them.
Yeah.
And then I've got like the Chase Sapphire and all that, and I love them, So Chase Freedom Unlimited, and then from there, like, what's like that natural evolution for somebody let's talk about the personal side.
Okay, perfect.
Yeah, so like the natural evolution of like, okay, Chase Freedom, what does it do? Like, obviously it's a beginner card. And then what's like maybe the next couple of cards after that?
Okay. Another personal card that I absolutely love is the American Express Delta Gold card. I've noticed that the personal American Express co-branded cards give massive limits. So like the Amex Delta, Amex Hilton, Amex Marriott.
Interesting. I didn't even know that I knew that was a thing.
They slap hard.
No way.
And so I would recommend the Chase Freedom Unlimited as one of the first cards. You want to have at least a 690 score, ideally 720 plus. Okay. Chase Freedom Unlimited, American Express Delta Gold, those are great cards. Bank of America has one called the Cash Rewards. That gives good limits as well. And that B of A card and American Express card allow you to get the limits increased fairly easy. So if you spend on those cards for a few months, you can get those limits increased very easily.
You just got to give them a call, say, hey, I need a limit increase.
Exactly.
I think you have to give them an amount, right? You're like, I want to try for this amount, and they put it in their computer. It always comes back a little less.
Sometimes.
Okay.
It depends on your spending activity, but each bank has an internal rule of how much they can increase the limit to.
Okay.
And it varies bank per bank, but it's that's a strategy. So so Chase has a rule called the 524 rule. So basically, if you're at 5 recently opened revolving credit card accounts in the last 24 months, you cannot get another Chase card.
Interesting.
Unless you go through a relationship manager.
Even if some of those 5 weren't Chase.
Yeah.
Wow. Okay.
So you want to make sure you go back to Chase. So get that first Freedom Unlimited. Go to American Express. Get 1 or 2 of those cards, and then you want to come back to Chase. The Chase Sapphire Preferred or the Reserve. Sapphire Preferred or Sapphire Reserve. Okay. The Reserve is my favorite travel card. I think it's the best travel card in the game. It has amazing benefits. Yeah. The minimum limit on that card is $10K. So that's why you got to work your way up. But you get 10 points per dollar spent on Lyft. You get 3x on travel and dining. You get global entry, pre-check. You get airport lounge access. There's amazing benefits that come with that card.
Yeah, I love that. I do like e-commerce. We'll talk about that in a little while. But I told my partner a long time ago, I'm like, hey, if I broke even on like the actual e-commerce store, but I got all the points from spending $150,000 a month on a credit card, on one card. I'm like, dude, it would be totally worth it,
Oh, yeah.
It'd be like 2 million points a year.
It's unreal.
Like having one store.
Don't even get me started on credit card points. Credit card points is the most amazing byproduct of credit cards. And people, use debit cards. They have no idea how to use credit card points. I mean, this card right here is the Amex Business.
The gold?
Amex Business Gold is 4x on the top 2 categories. So you can do gas and dining, or advertising. Which 4x, that's huge. So you want to find the cards that are giving the best rewards and then using them strategically based on what you're spending on. Right. And then once you have points, you want to be able to transfer those points to transfer partners. And so instead of a point is worth 1 cent. Yep. So on a 1-to-1 ratio, if you have 1,000, if you have 1,000,000 points, if you have 100,000 points, that's about $1,000 on a 1-to-1 ratio. If you're able to transfer those points to different airline partners, like to the airlines directly, you can get up to a 12x multiple on your points.
Really?
Yeah.
So that $1,000 could be worth $12,000 Hypothetically.
Yes.
Okay.
100%. And
Gotcha.
so you want to have a strategy on accumulating the points and then a strategy on redeeming the points through transfer partners. That's a whole complex strategy,
Okay.
but that's how you maximize it. And I have a good friend named Tommy. Travel Like Tommy is his Instagram handle, good friend of mine. And he specializes in planning bucket list trips for people with their credit card points.
No way.
I'm going to the Maldives. I'm actually going to Greece, Croatia, Italy, and the Maldives. And he helped me plan that Maldives section on points. And I used 280,000 points on the reservation instead of paying $14,000 cash.
Really?
So on a 1-to-1 ratio, 280,000 points is $2,800.
Right.
That's what you get if you use it on the Amex portal.
Sure.
But I transferred the points to Marriott and got this, what is that, 5X, 6X, whatever that is, multiple. Insane. And so
No way.
and so you can do that for airlines and get even a higher multiple, up to 12X, and get the first class business seats with the champagne and caviar. It's unreal.
And so he helped you do that on and that's a whole nother conversation I get. I'm going off topic a little bit, but I have a lot of freaking points on, like, let's just say like Chase Sapphire, for example. I probably have 1 million points just on my Sapphire, like right now, you know? And that's not including I've got the Amex and all the other good stuff there. So that was the hotel you were talking about for 280,000 points.
Yeah.
This is insane.
In the Maldives.
Like,
it's going to be absolutely insane.
We're going to have a conversation. I need Tommy's phone number when we get out.
Yeah, for sure. For sure.
I love it. So basically then it's a matter of, you know, getting the right credit cards at the right times, knowing and researching all this. Like, for somebody who's just starting out, you know, should they just kind of just do it in stages? Like, hey, I'm going to go get a credit card, build everything up, and then maybe wait 6 months or a year. Then they upgrade to maybe the Chase, like you said. Do you have a preference between this preferred or the reserve?
I like the reserve because it has better benefits. But for someone that has slightly less good credit, you can get the preferred and then upgrade to the reserve the next year. Okay. Reserve also has a higher annual fee, but I think the credits and the benefits outweigh it for sure. But to answer your question, you don't want to have more than 2 recently opened revolving accounts in the last 6 months, or more than 4 in the last 12 months. You can push it to 3 and 5 in the last 6 and 12 months, but you want to be careful. And so if you're starting out, you know, maybe just do 2 right off the bat, and then wait a variety of months, get another one, you know, slowly get that. The first priority is just to, you know, optimize your credit profile, get at least 1 credit account that's over $10,000, and then, you know, get added as 2 authorized users so you can increase your average age. And then once you have 4 primary accounts, you're in a good position for the business credit accounts. Something you should do simultaneously is opening up business checking accounts at some of the top banks. Chase for sure. I would do personal banking at Chase also. They have the best cards, they have the best limits, the best rewards, the best everything.
Yeah, they're great.
I love Chase.
They are.
So bank there, personal bank, business banking at Chase. Also, you know, open up a business checking account at Bank of America, at US Bank, you know, top grade A banks like that are relationship based.
Sure.
You don't need a bank account at every bank you're applying for business credit at, but those really help.
Are the good ones. Okay,
Yeah.
for sure. No, I agree with you. I think Chase is like by far my favorite. I've had an account with Wells Fargo. I probably have like 10 accounts with Wells Fargo. I've had them since 2004.
Yeah.
And I started like putting a lot of my stuff through Chase, you know, just 'cause I'm like, they're just way better, you know? So I love that. Okay. So, and I didn't even actually know that. So 2 credit cards, 2 revolving credit cards, at any given time could be opened every 180 days.
Yeah.
Pretty much, or 4 every 12 months.
Yeah.
Okay.
If you go over that, say for example, you're at 4 personal credit accounts open in the last 6 months, and you try to apply for a 5th, whether that be a personal or a business card, there's a high chance you're going to get denied because there's so many recently opened credit accounts.
Yeah.
So the first goal is just optimizing your personal credit profile. You have to be patient. You have to be patient. You have to work on that. You cannot skip steps or it could set you back for many months. After that, you know, it's building, actually simultaneously building those banking relationships. And then once you have those relationships built and your credit profile optimized, then it's understanding what business credit card products you have available to you based on the state that you live in. And something in Credit Stacking, my coaching program, we built out a full database that lists every single 0% interest business card state by state, all 50 states. So like, to know that information as an entrepreneur, it makes it so much easier to just go down the list. There's notes on all the different banks on what exactly you have to do, data points on how to get approved for the maximum funding amount. And then it's understanding what, you know, sequential order to fill the applications out. And some banks, you want to be doing those through relationship managers. So relationship managers facilitate applications, and instead of the computer algorithm giving an answer, the relationship manager will send the application to the underwriting team. Therefore, it's a human looking at your application. Takes a little bit longer, but that's how you get the $75,000 to $100,000 Chase business credit cards on one card.
Wow. Okay, I want to talk about that here in just a second. Before we jump over to the business and peel back that entire onion, what is your number one favorite personal credit card that's like the top of what you would say in your experience on the personal side?
Personal side, Chase Sapphire Reserve.
Really? Over the Amex?
Yeah. I mean, so the American Express definitely has good, and we're talking about the Amex Platinum.
Yep.
I have the Business Platinum, but Personal Platinum is very similar. You only get 1x per dollar spent on points.
Yeah.
You do have you get lounge access at the Centurion Lounge, which is great. But in terms of gaining points, it's not superior than the Chase Sapphire Reserve. Chase Sapphire Reserve, you have 3x on travel and dining, and then you 10x on Lyft, which is incredible. Then it comes with amazing travel benefits as well. So if there was one card, that is my favorite personal card. And, you know, if you're a big traveler, if you like traveling to Marriott properties, which I do, the Marriott Bonvoy card is epic. You get 17x, 17 points per dollar spent at Marriott.
Really?
Yeah.
Wow.
It's amazing.
And do you need, out of curiosity, like back to what we were talking about a little while ago, remember when you transferred those points from wherever to Marriott, for example? I think that's what you said for that, the resort, right?
Yeah.
Do you need the credit card in order to do that? Or like, let's say you didn't have the Marriott Bonvoy credit card.
Yeah.
But you had 500,000 points on Chase Sapphire Reserve. Could you have done what you did?
So this is a really good question. You don't need the Marriott credit card, but you do need either the Reserve, Preferred, or the Business Inc. Preferred. If you just have the Chase Freedom Unlimited or a different basic Chase card, it doesn't allow you to transfer points out. But you need either the Sapphire Preferred or the Sapphire Reserve, then Chase will let you transfer those cards.
Interesting.
So that's why, you know, and the Chase Freedom Unlimited gives you 1.5x on everything.
Okay.
So, you know, the Amex Gold gives you 4x on gas and dining.
Yep.
Then you have the Reserve, which is 3x on travel. And then you have the Chase Freedom Unlimited, which gives you 1.5 on everything else.
Yep, but that's more of an entry-level kind of card. Okay.
It is, but it's one of my favorite.
Really?
Yeah.
Okay.
Because
but you
it's
can't
1.5.
transfer points.
You can't transfer points.
Okay.
So I like to complement it with the Chase Sapphire Reserve.
Gotcha.
So I'll generate all the points. And then another thing, when you have multiple Chase cards and you're generating Chase points, you want to make sure you combine the points over to the Chase Sapphire Reserve before redeeming them, because if you redeem those points on the Chase portal through the Reserve, you get a 50% bonus.
Really?
So that gives you 1.5 to 1, 1.5 to 1 ratio. So 1.5 is obviously better than 1 to 1, but the best is to transfer them out and get that up to 5 to 10x.
1,000,000%.
That's what I save my points for.
Yeah, you almost have to do it that way. Like, why wouldn't you do it that way?
Once you start doing that and you see what's possible and you see what other people are or what they're doing with their points and how they're able to afford these $10,000 first class seats, and they're using points and they're only spending a fraction in points, it makes you think a different way. Another favorite way I use my Chase points is to transfer them to Hyatt. So Hyatt has an exclusive partnership with Chase. So if you have Chase points, you can transfer them to Hyatt and easily get a 2 to 5x multiple on your points.
Wow.
I was in Santorini last summer for my birthday, and we were staying at a $1,400 a night room, and we were only using, I think it was either 30 or 40,000 points per night. So 30,000 points is, on a 1-to-1 ratio, is $300.
Yeah, nothing.
But we're using that 30,000 points to stay in this $1,400 a night room.
Because you're using it at a 7-to-1 ratio or an 8-to-1 or whatever you're using it at. Right.
So we're getting that massive multiple. And so
are there different times, and this is another conversation, I want to talk about the business stuff too, but are there different times of year, or when you go to I'm sure this is stuff that your boy Tommy talks about or helps people with or whatever too. But if I were to just go take my 500,000 points or whatever I had on my Chase Sapphire Reserve, any time of the year, or are there different promotions and stuff in different times of year? You have to really know what you're doing.
There are sometimes promotions on the transfer partners. Say, for example, you can get a 25% bonus from sending from Amex to Marriott. Those are seasonal. Sometimes those happen. And when you see those, sometimes take advantage because you get that bonus on transferring them out. In terms of finding the deals, it's very spotty. Sometimes the deals come last minute and you have to be flexible and you pounce on the deals. Or sometimes if you book out in the future, you can get those good deals, but it's a bit spotty.
Got it. Okay. Interesting. Yeah. And I'm sure that's something that, like, if you just paid attention to it every day, or just find somebody that knows what they're doing, have them do it, and just talk to them a little bit about it. Just random question: do dudes like Tommy make their money in points, or do they make their money in money? Like, how do you pay the guy?
Money.
Money.
Yeah, money. Yeah.
I'm like, how do I transfer points to him? You know?
Yeah, right. You actually can't transfer points. You only
person.
can, I think, to it's a spouse or a family member.
Yeah.
There's definitely restrictions, and if you try to sell your points, or you can get banned.
Sure.
So
I bet
your points are basically your points. Maybe your spouse's
you got to be careful.
Points too. You gotta be
Okay,
careful.
for sure. So let's talk a little bit about the business stuff. So 75 to 100 grand. The idea is to have, your personal credit built up, right?
Yeah.
Before you go and you try to tackle the business, have the relationships with the big banks, the grade A banks, and then what? I mean, I hear you talk about, hey, business credit doesn't affect your personal credit, yet they run your personal credit though to get approved, right?
They do.
So talk to me a little bit, like, how does all that work?
Great question. And I want to say this first. You don't need an aged business. You don't need a cash flowing business. The most important thing is your personal credit. People can get, 23-year-old gentlemen can get approved for $200,000 in business credit, 0%, with a brand new business.
Wow.
I have multiple members of mine, one at Arizona and one at ASU, right down the road, and they got approved for multi-six figures and 0% credit on a brand new business, 23 years old.
Do they even check that?
Yes. So all those things will have a factor. So they're looking at your personal credit. They're looking at the previous bank relationship. They're looking at the liquidity in the bank account. They're looking at the age of the business and then the type of entity. What does that business do? The business, what the business does is going to be classified as an NAICS code, and that classifies risk based on the business. So real estate businesses can have a hard time getting business credit. But consulting businesses, e-commerce, marketing agencies, those type of businesses have less overhead and they're less risky. So sometimes when you're a real estate investor and you're trying to get capital to flip more deals, sometimes it makes sense to actually seek the funding from a lower risk business entity, even if it's brand new. Get that money, loan it over to the real estate business, use that for flips, things like that. So that NAICS code is incredibly important to be aware of. And when you go into the bank, to make a bank account, they're going to ask you what your business does. The reason they're asking that is so they can classify your business based on the risk of the NAICS code.
Interesting.
Yeah, so understanding that is super important. Having a bank account at some of the relationship-based banks like Chase, if you can show liquidity, that helps. If you can put $5K, let it sit for 30 days, that helps. If you can put $20K, that helps as well.
Yep.
But it doesn't need to be specifically cash flowing. That will help, but it's just not necessary. If you have a business that's 6 years aged instead of 6 months, that's going to help, but it's not necessary.
Wow.
The personal credit is the most important thing by far. So when you go out to these banks, you're applying for these business credit cards, you are getting a hard inquiry on your personal credit profile. But here's some major sauce. So because that business credit account is not reporting to your personal credit profile, it gives you the ability to actually dispute the hard inquiry on your personal credit profile. And because the bureau can't see the account because it's not reporting, you have major leverage on getting that hard inquiry removed.
Wow.
And we teach in the program how exactly to do that. You can get inquiries removed on Experian in 24 hours or on Equifax and TransUnion in less than 2 weeks.
No way.
So when you get to that point and you're applying for cards, hard inquiries is basically the gas and the brake. If you're clear on inquiries, you have 0 inquiries in all 3 bureaus in the last 6 to 12 months, then you can apply for more credit. If you have like 3 in the last 6 months on all 3 bureaus, you need to slow down. You need to get those removed first, remove them, and then apply for more credit. And so to understand that business credit inquiries that are on your personal credit profile are removable and understanding how to remove them, get them removed, then you can go seek more funding.
They automatically fall off too at a certain period in time, right? On the personal and the business side, like all together?
Yeah, so any inquiry on your personal credit falls off in 2 years. Okay. After 12 months, they don't have weight, but the most weight is in the recent 6 months.
Gotcha.
So you want to look how many inquiries you have in the last 6 months, also in the last 12 months.
Okay. If you've ever wondered where we skip trace all of our data, we actually use batchskiptracing.com. We skip trace millions of records on a monthly and annual basis, and this is how we do the wholesale volume that we do. This is also how we do so much volume in the retail real estate industry as well. Without good contact information, how are you ever supposed to get a hold of the homeowner? Again, we use batchskiptracing.com for all of our skip tracing solutions. And as you can tell, Batch has the best quality data in the industry. And good quality data is arguably one of the most important things that you can have as a real estate agent or real estate investor. When you use batchskiptracing.com, before you check out, make sure to use the discount code ZABACK, ZABACK, for a discount. Let's get back to the show. Yeah, because, and then to go, just to recap, there's like 5 main factors with a credit score, right? You've got credit card utilization,
payment history, credit mix,
length of credit,
and
then inquiries,
and then new credit.
Okay.
Yeah.
Which would be like the same as inquiries, or
inquiries and the credit age.
Okay.
Yeah.
Gotcha. That makes sense.
Or the amount, it goes to credit age, the amount of recently opened credit accounts.
Got it. Okay. And then you're talking about, going back to the business now, getting a business credit card, right? What business credit cards do you recommend in the beginning? So like, let's say you have your personal built up now, right?
Yeah.
You're good on the personal side. You got a 750 or whatever credit score, right?
Yeah.
And now you want to go start attacking the business credit. Yep. Where do you go? What do you do? What cards are you looking for? You said like 12 to 20%, no interest. Like, what do you have? You got all these credit cards here. Like,
I got a full book for anyone only listening. I'm holding my credit card book with over 50 business credit accounts. But where I would start is with Chase.
Okay.
So Chase gives the highest limits. They're the best. They have 0% for 12 months. I would start there. And then I would move to other grade A banks. So I usually recommend to go to Chase, Bank of America, U.S. Bank, hit the grade A banks first and then start attacking some of the smaller banks. American Express I also include in the top as well. But anytime you have a card with that bank before you're applying for the 0% interest credit card, you're going to get a higher limit. So if you have an Amex, charge card, an Amex Business Gold, get that one first, spend on it for a few months, and then apply for the 0% interest business Blue Cash because they're going to trust you more. So that you're going to get a bigger limit. Anytime you have a first U.S. Bank card, like a revolving account, it's the business leverage at U.S. Bank.
Sure.
I recommend get that card first, spend on it for a few months, and then go for the 0% interest business platinum, which is 0% for 20 months or 18 or 20 months. And that card goes up to $50K.
Wow.
And that's exactly what I did. I got the business leverage, spent for a few months, then went for the business platinum and got $50K, 0% for 18 months.
Wow.
And that's just one bank. Then we go bank by bank. Once you start to get to some of the smaller banks, if you look deep, you'll realize that some of these smaller banks don't issue their own cards. They're issued by different banks like Elon Financial, TCM Bank, FNBO. And so those types of banks, you don't need a business relationship. You don't need business checking accounts. But we have, each of these little bank networks, they have, each bank has different underwriting rules and criteria. Sure. And so we've helped hundreds and hundreds and hundreds of applications. We understand the underwriting criteria.
Yeah.
And because of my relationships with the relationship managers who talk to the underwriting team, I've extracted so much information from these RMs, from the underwriting team, so I know exactly what they're looking for.
Right.
And so when you know that, you can give yourself the highest chance of getting the maximum funding amount per credit account.
I love that.
And then once you go through a credit stack, you kind of max out your inquiries. Once you're at like 3 inquiries per bureau, 3 or 4, then you want to go dispute them, get them cleared, and then go for more banks. Either more banks or go to the same banks with a different business.
Interesting. Okay.
Yeah.
And then you keep mentioning different bureaus, right? So what are we talking about here? Just so everybody understands.
Right. We have 3 bureaus. We have Experian, Equifax, and TransUnion.
Okay.
Those are the 3 bureaus. And every time you apply for a card, that bank is going to pull from 1 or 2, sometimes 3 of the bureaus.
Gotcha.
And so another major thing is understanding what bureau each bank is going to pull from based on the state that you live in. And so if you're in Washington State, Chase might pull from Experian and Equifax, but if you're in Florida, Chase might pull from TransUnion. And so we also have a database that we've created in credit stacking based on the hundreds of applications we've helped. So we know what bank what bureau each bank is going to pull from based on the state. And so
Interesting.
say, for example, you're someone that has tons of inquiries on Experian. We don't want to apply for any banks that are going to pull from Experian because they already see so many inquiries. So
Yeah.
you want to find a bank that's going to pull from Equifax or TransUnion. So when you look at this database that we created, you can see, okay, here are my options. This bank pulls from TransUnion. This one pulls from Equifax.
Yep.
I should probably focus on those now while I get my Experian inquiries removed.
Right.
Yeah.
And does that have anything to do with like I know that for example you got like a FICO score, right?
Yeah.
And then aren't there different types of aren't there other ones too? Like FICO's just one of them, isn't it?
Yeah, so FICO is the one the banks pull from. There's
Okay.
Vantage Score and FICO Score. Essentially, they're just determining your risk level to lenders. All the big banks will be pulling from FICO, so you want to make sure you're checking FICO.
Got
If you
it.
look on the Credit Karma app, you'll see your Vantage Score. Credit Karma is a very easy app. It's a good way to check your credit for free, and you can see things like your utilization, your accounts, late payments, like easy things like that. But the score is a different score
Yeah.
than your FICO. So I like my score IQ. That shows all three bureaus and your FICO score. Every time I'm applying for a credit card, I'm looking at my FICO report because I know when I hit submit,
Yeah.
the banks are going to look at it. So you want to look right before.
Right, of course. Yeah, you want to know. I mean, because otherwise, don't hit submit if you know
Yeah.
that there's a problem, right?
You want to know. And in terms of, other things they're going to be looking at on your personal credit profile, one of the main things is your utilization. And so you want to make sure that your utilization on every single personal account, every single one, is under 10%.
Gotcha.
At least under 30%, but if you can, about 5 to 7% is ideal on every single account.
5 to 7. Now, I feel like maybe it's probably true, but you don't want to have a zero balance on a card either for too long,
I want
right?
a little bit, yeah.
Because they'll close the account, will they not?
They will. If you're inactive on a card for too long, they can and will close it. I like to, all my personal credit cards, even if I don't use them, like I have a Citi personal credit card before I realized it didn't provide me any value, I still put my Spotify subscription on it and just put it on auto pay.
Sure.
My health insurance is on, another credit card. Put it on auto pay and at least they can see you're using a little bit. That way they don't reduce your limit or close the account.
Right. Yeah, that's actually really important because that's happened to me where I've had, very similar, right? And I've done that because I knowing that, like I'll put a thing on there and then I forget about it, I cancel it, whatever, and then like they closed an account like a year ago. It was like a 9-year-old account, and so that was like a good account to have open because it was helping the age of my overall credit, right?
Yeah.
Because they take the average, and so I think that's obviously really important. So do you just have all of these on auto pay?
Oh yeah, for sure.
With like a small charge?
Every single one is auto pay, whether it be, it's at least auto pay on the minimum. And if I want to pay more, I will. But getting a late payment sucks, and you do not want to run into a late payment.
Yep.
Basically, if the payment is later than 30 days, that late payment is most likely going to report to your personal credit profile, even on the business accounts. So don't let it be later than 30 days. If it's 5 days late, it's not going to affect your credit, but it is going to affect your relationship with that specific bank.
Gotcha.
So if you're like 10 days late, it's not terrible, but if it was Bank of America, for example, Bank of America is going to see that, and then you have to build the trust back.
Yeah, 100%.
Yeah.
Well,
But always turn auto pay on.
Is there anything you can do if you get a late payment?
There is for sure. You can
Okay.
dispute it. The Fair Credit Reporting Act is very protective over consumers. And if you know the law and you hire a nice credit repair company, which I do have one, we help people dispute negative items on their credit profile.
Wow.
And there's very specific timeframes where the creditors or bureaus need to respond to. And if they can't prove a variety of different things, they have to remove the negative items.
Wow.
So anything negative, collections, late payments, hard inquiries, anything's removable for sure.
Yep.
And even once you have a collection, once the lender sells that debt to a collection agency, the best way to go about it is actually to dispute that collection, because even if you pay that collection, there's a very high chance it's not even going to be removed from your credit profile.
Right.
And so some people think like, oh, I need to pay the money back. Well, it's not with the lender anymore. The lender sold the debt to the collection agency. If you pay it off now, it doesn't even help your credit. So
Sure.
like the best option at that point is go through the credit repair route. And
Yeah,
if anyone needs help with credit repair, shoot me a DM on Instagram, King of Debt. But we help a lot of people.
Yeah, because what are they going to do at that point? It's funny you say that, because then if you didn't pay it, it's almost like, well, they can't report you to collections. Like, they're not going to sell the debt again to another collection agency.
Exactly.
Like, what happens if you don't pay it? Like, nothing?
I mean, it just stays in your credit for 7 years.
Right.
Yeah.
But it's already on your credit.
Exactly. Yeah.
Like, you see what I'm saying?
And oftentimes, if you have a collection, say it's 2 years old, then you pay it, then the collection gets updated. So instead of expiring in 5 years, it's going to reset the clock. So paying
Gotcha.
collections, unless they have writing or email that says, if you pay it, we'll delete it from your credit profile.
Gotcha.
It's pretty rare, but if you can get that in writing, that's the only way it makes sense to pay collections.
Got it. Okay. Yeah. Otherwise, just dispute it and figure out like for example, I had a collection one time where it was like a medical thing, and they sent it to the wrong address. Like I didn't live there anymore, right?
Yeah.
Like the bill or whatever. So obviously I couldn't have paid it, and I didn't find out for like 3 years, dude. I mean, it was like way far down the line, you know. And I don't even remember how I found out, but they're like, "Oh, you have a collection." I'm like, "What are you talking about?" You know, and they're like, "Well, we sent it to the." I'm like, "Well, where'd you send it?" And they're like, they told me the address. I was like, "Yeah, no wonder." Like, it didn't get paid. You know, that was like an address like 5-10 years ago or whatever it was at the time. And so I would imagine that in that scenario, you could obviously probably go and argue that, right?
Yeah, for sure. I mean, you have leverage for sure. And with the right strategies, anything's removable.
Right. It's like, hey, you didn't.
I never got it. The consumers are very well protected, as they should.
It's almost like the landlord-tenant. When you look at like take California, right?
Oh yeah.
And look at the tenant laws in California. The tenant is protected. Let's put it that way.
Sure.
I love that. So then back to the business stuff. So, you can get this 0%. Now, what if like somebody needs cash though? So let's say you go get a $50,000, like you get this one, right?
Yeah.
And then you're like, well, you gotta. I'm trying to think of like different things in business that you have to pay cash for, right? And for whatever reason you can't pay credit. Like, what would you recommend?
So, you want to convert that credit into cash. We call it liquidating credit cards, and you can do it for a small fee. The last thing you want to do is do a cash advance because that's going to cost you a lot of money. So the best way to liquidate the credit into cash is run it through a merchant processor. What does that mean? Say, for example, you have a Stripe account. You can run the money through the Stripe account and turn that credit into cash. If it's your own processor, you have to be very careful. Transactions have to be very small, or else they'll close the processor, close the credit card account. But you got to find a way to find someone with a seasoned merchant processor. Say, for example, you have a coaching program, you're selling it for $3,000.
Yep.
All the transactions are $3,000, $3,000, $3,000, $3,000, and then you try to process a $50,000 invoice for someone you're trying to liquidate for. That's going to flag your processor, and it's not going to work. And so you have to find someone with a seasoned processor.
Got it.
And so one of the strategic partners that we work with in credit stacking is someone who facilitates liquidating the credit into cash.
Got it.
For a small fee, sends an invoice for $100,000 like that. Next day, you have that $100,000 minus that small fee, and it's very quick, very easy, in your account wired.
Gotcha.
But if you want to do it yourself, you have to do very small transactions. You have to be careful. It is possible. But if you have a real estate deal on the line, you want quick cash. You want no hiccups. That's how you do it. You find a seasoned merchant processor. You run it through, and then you got the cash.
Yeah, I love that. And why wouldn't somebody do a cash advance? I know you mentioned like it's not any good,
but
it's
expensive.
It is. Okay.
Yeah, it's expensive.
So that's the primary reason you wouldn't do that.
Yeah.
How much is it? I don't think I've ever done a cash advance in my entire life.
It's much more expensive. They charge very high interest rates on it.
Okay.
Yeah.
Got it. Like day one. So you get the cash advance and you're paying. And what about like though, let's say you have a 12% or 20% or 12 or 20 month interest free. Is that not including cash advance? Like if I do a cash advance,
you'll pay money for the cash advance.
Okay.
And it's not
they're gonna
it's
get
not
you.
reasonable.
Got it.
You want to find other routes for sure. If you have an invoice you're trying to pay, there are companies called Plastic and Melio. They facilitate if you show them the invoice, they can run the credit for a small fee and then send the money to the person you're trying to pay. But you kind of have to jump through some hoops.
Gotcha.
So that's another option for people.
Okay.
Yeah.
And then what is like the ultimate? So you have obviously the business, American Express, the silver one and the gold one. Is that called a platinum in the business?
Yeah, business platinum. Business platinum, business gold.
Business platinum, business gold. Between those two, what are the differences on the business side?
So the business gold does 4x points per dollar spent on the top two categories for advertising, gas, dining, things like that. And that's basically it. There's some like Uber credits or Uber Eats or something like that. But American Express Business Platinum, it's not very good for point accumulation, but it has tons of different credits. It gives you lounge access to the Centurion Lounge, which is a nice lounge for in the airports.
What's your favorite lounge?
Delta's pretty nice. I like switching them up. I have lounge access to basically every single airline lounge. Through credit cards. I like them all. I like switching them up. They all have different food, so it's good to switch up, not just go to the same one every time.
I was just curious. Yeah. I know that they give you with the Chase Sapphire Reserve, they give you the what is
Priority
it?
pass.
The priority pass. Yeah.
I mean, when you have the top travel credit cards, it makes your travel experience so much better. Like I just flew in from Beverly Hills today. I had Clear, which I get free from the Business Platinum.
Okay.
So I walked in, there's literally 0 line. Then I have lounge access to the Delta Lounge because I'm flying Delta and the Business Platinum gets me in. And then I had first class that we booked on points and got a great deal. And then I got a rental car. And one of the things we teach in credit stacking is how to get status at all the rental car companies for free without credit cards. So I go in there to National. I get upgraded to a nice Mercedes-Benz that I was really excited about. And then I drove here. And so like when you have these top travel cards and these little travel hacks, your traveling experience gets much, much better.
Yeah, it's almost crazy that like everybody doesn't learn about all of it, right? Like
It is crazy.
It took me. I'm nowhere where you're at, but I'm starting to learn more about credit and everything like that, and but I didn't for a long time. It's funny because before the show, I told you I was watching you and Ryan Pineda.
Yeah.
And I felt like kind of like how Ryan was kind of talking. He's like, dude, I don't like, you know, and like, because I'm a real estate guy too, right? And I don't know, in a weird way, like real estate's kind of an old school industry. I feel like you're at least it has been for a long time.
Sure.
Bunch of old people in the industry, and I just don't think like the information's ever been as available on like credit and really like the ins and the outs, like everything that we've talked about on the show, right? Because these aren't things that you really just hear about.
No. You have to be proactive. And that's why I don't blame anyone that doesn't know about business credit, because I didn't for 6 years as an entrepreneur.
Yeah.
And I learned about it. I'm like, holy shit.
Right.
This is crazy. This is crazy.
Is there anything else that people need to know about business credit? Like, I mean, obviously it seems pretty simple, but is there anything else that like you would say like people need to know this before they start, or like halfway through they're doing it, or I mean just in general?
Yeah, I have 2 things. So when you're figuring out what business to apply for, say you have multiple businesses, you want to prioritize your strongest entity. Your strongest entity in terms of cash flow, entity type, whether it be consulting, rent, real estate, the cash flow, relationship with the bank, the entity type, and the age. So look at those factors of all your businesses and then choose the one that's the strongest. Seek all the funding with that business, and then you can use that money for whatever you want. You can loan it over to whatever company you want, but focus on the strongest entity.
Okay.
Major thing is that NAICS code, it classifies your risk. And so focus on the lowest risk business.
Not real estate.
Not real estate. Yeah.
Okay.
If you seek money through a different entity, and then you can use it for the real estate business.
Yeah.
The second thing is you will get the highest limits by far if you apply through a relationship manager at the bank. Okay. These relationship managers actually don't hang out in the bank. They're very high level individuals. And if you can get connected with one, the limits you'll get at Chase are 3 times higher. Wow. If you go into the bank at Chase, sit down with a business banker, you'll get maybe a $25,000 limit. If you apply through a business relationship manager that goes to the underwriting team, you'll get 50, 60, 75, up to 100,000 per card. Yeah. But that is not possible through just a business banker. And so another thing in credit stacking, I have business relationship managers at all the top banks. And so when someone fits the requirements, once they optimize their credit, open a business checking account, I'll make a personal introduction to my personal business relationship managers, and then they will help facilitate those applications. And boom, we got massive credit limits.
That's insane. And how do you recommend like getting those relationships, like building the relationships, just getting started with a personal account, being in the bank, like talking to them, or what would you say there?
Definitely a bit of finesse.
Okay.
You wanna dress nice. You want if you do Chase Private Client, sometimes they award you one, but you want to dress nice. If you can show business revenue, things like that, they want to make sure you're taken care of, and you can get access to one. And then, sometimes we run into the relationship managers that are really looking to get maximum funding, and they're essentially having the conversation with the client or the user, and then they're relaying that story over to the underwriting team.
Sure.
So the relationship manager is trying to get as much funding as possible for the client. So if the client has, if they're talking good, they look good, they're, has good information that they can pass to the underwriting team, then they're, more qualified for these $75,000 cards.
Yeah, they're more likely to get it. Yeah, for sure. It's a human being kind of going to bat for you, right? Like,
Absolutely.
Yeah.
Absolutely. And a U.S. bank, for example, if someone gets approved for, only 20 grand and not 50 grand, my relationship manager will actually go back to the underwriting team and negotiate and try to get a higher limit. And we can show other statements of other banks and say, hey, look, Jimmy has 50K at Chase.
Yeah.
Let's give him 50 as well. And that works as well. But it's only possible through a relationship manager.
Got it.
And then the last thing I'll say about business credit, for now at least, is you can balance transfer debt over and over and over again. So say, for example, 50 grand on this business platinum expires in 18 months and you, for some reason, can't pay it back. Okay, get another business credit card and balance transfer the debt from that first card over to the second card. Therefore, you have 0% interest for another 1 to 2 years.
Got it. That makes all the sense in the world. On Amex in particular, with the Amex, I used to have an Amex business. I don't have one anymore. I have Amex Platinum personal card. You've got to pay it off in full every month, though, right? With any Amex, or is it just on the personal side?
So most American Express cards are charge cards. Those are the ones you have to pay at the end of the month. They have a new feature called the pay over time feature, which allows you to pay a little bit and kind of pay that balance over time. That does jeopardize your spending power a little bit. The charge cards are meant to be paid back every single month. But the credit cards that has a preset limit, like the 0% interest business Blue Cash, that's a 0% for 12-month card. So if you 30 grand limit, rack it out, and then pay it back once you start paying interest.
Got it.
After 12 months.
The only thing though is that won't it hurt the utilization for those 12 months? So like
only at that one bank.
Gotcha.
So this is another good point. And I actually have two things. One, you have to pay 1% of your balance of a 0% card. So say your balance, you're 50 grand, you have to pay 1% of the balance on auto pay every single month.
Would that be like $500 a month?
$500.
Okay. Yeah.
Yeah. So you have to do that, and you have to set up auto pay. Second of all, you're asking about the utilization of the business card. So say, for example, you have a Chase business card and it's maxed out. You want to apply for another Chase card. You want to pay that first Chase card down under 50% before applying for that second Chase business card.
Gotcha. Okay.
But if you're applying to another bank, U.S. Bank, American Express, Bank of America, they can't see that Chase card is maxed out.
But if the bank is reporting it though to the credit bureau, then can't they see it through the credit bureau that your utilization is like whatever it is?
Well, they could, but the business accounts aren't reporting to personal credit.
Gotcha.
So you have a maxed out Chase card on the business side. All the other banks can't see it.
Got it. Yeah. Interesting. Wow, I never thought of it that way. Because on the personal side, obviously, if you go max out a card, it doesn't matter if it's 0% interest for however long or not, right? It's freaking maxed out. Like
exactly.
Your utilization is whatever it is. The only way I was going to say you could counter, I guess, on the personal side is just to have enough overall credit utilization to where like one card could be maxed. I've done this before where, like, for example, I've got $250,000 in potential credit, right?
Yeah.
One card could be maxed out at like 40 grand. But in terms of my overall utilization, I'm still at like 10%.
That helps for sure. That helps. It's even better if you can make sure you're low utilization per account, but the average is it's a good place to start for sure. And then I think going back to personal comparable credit, having high limits on personal cards is helpful because if you need to say you have a $20,000 personal credit card, you need to float $3 grand on the card for the next month, your utilization won't be wrecked for the next 30 days. So it's good to build that purchasing power. And say, for example, you're in a bind, you need quick cash, you need 60 grand, and you happen to have 80 grand of personal credit, you can liquidate 60 grand from your personal credit cards. Now you have it. Say you need to pay a tax bill and like you didn't think your tax was going to be that much and you need money. Perfect. Liquidate personal credit. It's going to affect your personal credit score until you can pay it back. But it's another.
It's just going to shoot right back up.
Exactly.
Your score. Yeah.
Exactly. I had a 25K card. Personal card. I maxed it out. Brought my score from 800 to 700.
Yeah, I believe it.
100 points down. Mm-hmm. Paid it off. Updated. Right back up.
Yeah. If not even a couple points higher.
Yeah. Exactly. And to get your utilization to ideal levels, you want to pay it off like 5 days before your statement closing date.
Okay.
So even if you're paying on your payment due date, that amount gets reported to the credit bureaus.
Right.
So say, for example, personal credit card, $10,000 limit. You spend a full $10,000, which you can do just 5 days prior to the statement closing date. You need to pay it down ideally to $1,000 or less. 5 days before the statement closing date. Then that amount is going to be reported to the credit bureaus for 30 days.
Sure.
And then next month, when the statement closes, it's going to report whatever that balance is.
Yeah. Yeah, you could rack it up every month and then just 5 days before, like, pay it down. Yeah.
For personal credits,
and I agree, like, 1,000,000%. I think that's actually a misconception that you just mentioned right now, which is, like, the 5 day in advance, right? Because the payment has to post.
Yeah.
And that balance has to adjust on the day that they report, right? So, like, because I had to look, too. I always thought, and I think a lot of people think, oh, it's just the first of the month. And that's not true.
No.
Every credit card is different. So, like, for example, I have a Southwest card, and then I have, like, a Chase Sapphire. I actually have the Preferred and the Reserve, right? And they all have different closing dates.
Nice.
Yeah. So every one has a different closing date, though.
Yeah.
When I go in, my Reserve, I think, is actually on the 1st. My Preferred, I think, is on, like, the 20th.
Yeah.
And then my Southwest is, like, the 10th.
And you can change them.
Can you really? Okay.
Yeah. You can modify them.
Like, just, like, one time probably, right? Where you're like, I would prefer to make my payments on this date or whatever.
Actually, I don't know how frequently, but you can change. Like, say, for example, it's the 15th. I know you can change it to the 1st. I think it's either kind of like beginning of the month or middle of the month, but you have some flexibility.
So that way you don't have all of your cards
scattered.
Like, right. I love that. Okay. But I love what you said on the 5 day thing. I've even noticed that with, like, a weekend. You know, if I go to pay a credit card statement on a Friday, really, depending on, like, how it all works, I don't know exactly, but it won't really technically be normally till, like, that Tuesday.
Yeah, right.
It's not even normally the Monday a lot of times. It's actually the Tuesday where it'll post.
Right.
You know, so if your state, it really, like, 5 days at a minimum probably, if not a week, if there's a holiday or anything like that, right?
To be safe, yeah.
Yeah, okay. Because that can screw you up. I mean, if you...
For sure. If you're getting ready for a funding round and you blow your utilization and it's, 50%, you got to wait 30 days.
Yeah, you do.
Sets you back. So you want to be careful.
Do creditors look at, like, okay, let's just say, for example, you mess up, right?
Yeah.
You blow your utilization, you 80% utilization. Here you are, you've got to wait another month. But the next month you pay, see your score, like for you, for example, like you mentioned, your score goes from 800 to 700, right? But then the next month you figure it out. It goes right back from a 700 back to an 800.
Yeah.
And then you go to apply for a loan or something. Do people ever look at, like, that trajectory and they see, like, the history of your score going down and then back up?
It's a good question. They'll only see what they pull on that specific date.
Interesting.
Yeah.
Okay.
Yeah.
So they're not looking and saying, well, last month.
For sure.
Okay.
Yeah. Whatever they pull is what they see of that snapshot.
Got it.
Of whatever's updated.
So they're not going to judge you if you made a mistake, like, in terms of that at least.
Yeah, they
like
can't. They won't do that.
Prior.
They won't do that.
Got it.
However, if you have, say, for example, American Express personal cards or multiple different personal cards, that bank will run consistent soft credit checks on your personal credit profile. And if your credit is in much worse shape than it was when you got the card, they can reduce your limits on that card.
Got it.
So let me give you an example. You get approved for the American Express, one of the personal cards, you have a $10,000 limit. Your score was an 800. But now, like months later, your score is at a 600. You had some bad stuff happen. American Express is running frequently soft credit checks, and they're going to see, this person is in trouble. We're going to reduce his credit line down to $2,000 because he looks risky based on this soft credit check.
Got it. Interesting.
Yeah.
Okay.
That's why you always, sorry to cut you off, that's why you always want to keep your personal credit profile built and
you got to be
dialed
in.
Dialed in.
Yeah, you do. It is your report card for life.
For
like,
sure.
It really is. Yeah. American Express, the charge cards at least, right, on personal or business, they don't report, like, it doesn't.
A limit.
Yeah, there's no limit,
don't.
Right?
And
so how does that work? If I go charge $50,000 on my Amex?
Yeah, it's a good question. And that's
in
why
terms of utilization,
that's
right?
a good point. I really only recommend Amex charge cards, like the platinum and the gold, on the business side.
Really?
Unless the person's comparable credit is already good. As I kind of said at the beginning of the show, the main benefits of personal credit cards is to build a relationship with that bank. Second of all, build comparable credit.
Yeah.
So if you have lower limits, under 10K limits, you're trying to build comparable credit, the charge cards won't help with comparable credit because there's no reported limit.
Right.
So you want to get credit cards first. But say you have $40,000 of collective primary limits on your personal credit, then getting an Amex charge card can work and can be beneficial for you, but you want to build that comparable credit first.
Don't do it to build the credit.
Yeah.
Do it once you have it, right?
Exactly.
Okay.
Exactly.
Got it. That makes sense. Yeah, because I've looked at my credit numerous times with the Amex, and I'm like, I don't know how this works.
It's weird, yeah.
It doesn't play into my overall utilization. Yeah. What is a perfect credit score? I feel like this is
850.
850. That's like
I'm working up. The highest I've been is 826.
Really?
But you need to have a ton of accounts, diversified mix. You need age. I mean, I'm on my way for sure.
Have you met anybody with an 850?
That's a good question. I don't think I have. but I want to. If you have an 850 credit score, definitely DM me, King of Debt. I would love to talk.
We got to figure out how, you know. I wonder, like, what the exact criteria would be. It makes you wonder if it's even possible. Like, maybe you get, like, an 847.
No, it's possible. I believe it's 21 primary accounts. Okay. It's a specific amount of age, and it's a specific amount of diversity. Obviously, 100% payment history. But you need diversity to have that perfect score, and I believe it's over 21 primary accounts.
Wow. Yeah. Okay. Yeah, like a 2% utilization on every card. It's probably like some exact formula to it.
Exactly, yeah.
Yeah, okay. So the highest you've been is an 827?
6.
Yeah. Okay. And what were you doing to get that score?
So I've been hovering around 800 for a bit, like many months, maybe a year. But what brought me from 800 to 826, I briefly mentioned, is that pledge loan. Okay. And so you get a savings account. Only specific banks do this, but you can get that savings account, take a pledge loan against your balance. So I put $10K in the savings account, and I took a $10K pledge loan against my collateral. And then I paid off $9,500, and then it reported 95% off paid personal installment loan.
Wow.
And just jacked my score up.
Yeah. What are your thoughts on the e-commerce world and credit cards? You know, I mean, I told you at the beginning of the show, right? Yeah. Like, I've got a couple of e-commerce stores, like Amazon automation, stuff like that, right? And my philosophy in the beginning was, if I broke even and didn't make $1, right?
Points.
But I got the points, it would be worth it, right?
Yeah.
And that was before I knew I could get like a 7-to-1 ratio. Like,
yeah, you know,
true. I learned that today, you know. So it was worth it to me back then. Now it's really worth it. I'm going to be buying another store when we get off the show. What is your opinion? You see a lot of people out there. We know a lot of the same people that are selling the Amazon automation. Like, I feel like nobody's really talking about that. I mean, I think, like, I don't know if I'm missing it. Everybody's talking about the passive income, and they're selling it like all these other ways, and nobody's saying, hey, look, wait, hold on, slow down. Like, if you didn't make $1, but you got 1 million credit card points a year, and you could convert them to Marriott or do this or do that or fly Emirates from here to Dubai or whatever, right? Like, why are people still just misinformed on that? Are they just not thinking about that? I mean, what's the deal?
I mean, I think they're just not thinking about it. I think, you know, some people talk about it, and a lot of people know you can redeem the points on a 1-to-1 ratio, but not many people know you can redeem them for that 10x multiple that we've been talking about. Sure. Another benefit of the credit card points and, you know, just running massive, you know, amounts of transactions through these cards is you're building the relationship with the bank. So say, you know, have this Amazon store with Amazon, you're running it for 6 months, you put a few $100,000 through it. Now you apply for a 0% card, you're going to get a massive limit on that card.
Wow.
Or if you're doing the same thing on, you know, Chase cards, and then you apply for the 0% card, you know, it's building that relationship with the bank on top of those credit card points.
Yeah.
So I think those are two things not many people focus on in terms of e-commerce is, of course, the points and then how you redeem the points, but also the relationship that you're building with the bank because they're seeing so much money go through those cards.
Yeah, that makes sense. Like, okay, so I have a random question. I used to own an ATM company, okay, a while back, and we had probably like 400 ATMs throughout the country. Now, with the ATM business, in terms of just a bank account in general, a lot of banks didn't like the industry.
I've heard,
right?
yeah.
So you'd have to be very selective. I'd have to go to a particular bank. Either you have to lie to one of the big grade A banks, right? And they're like, what, like you said, they're like, what type of business are you starting? And I'm like, oh, like whatever. And they'll shut you down, right? They'll realize you're doing the ATM business. They'll shut you down. Or you go to a bank that is okay with it. You tell them, hey, I'm doing the ATM business. So with as big as like e-commerce has gotten, drop shipping, you know, even just like Amazon FBA, like whatever, right? Do credit card companies not care that people are, because essentially what people are doing is they're charging 40, 50, 100 grand, and then they're 9 times out of 10, they're paying it off, right?
Yeah.
It's like, what's the benefit to the credit card company if they're not making any interest on that money and then they're just giving away the points?
So they make money on the interest.
Okay.
So they want people to default. And I think that's a huge reason why they don't teach people about credit, because they want people to be caught paying interest. That's how they make a lot of the money.
Right.
And so, you know, guys like me come in and I teach people on how to take advantage of the banks. They already take advantage of so many people. You know, I feel like sometimes I'm like the Robin Hood. I'm out there saving people or trying to save people and take advantage of, you know, the tools that they're giving us. And if you know how to use them, you can take advantage of the banks instead of vice versa.
I like that.
And then another thing you said that sparked a thought when you were talking about the ATM business, you kind of got to tell the bank something else. it's valuable to know in life in general, but specifically in the credit game, what information is verified and what's not.
Right.
And also, where are those like ethical lines of like completely lying or just exaggerating?
Sure.
Even things like when you look at the figures on a credit card application, it's asking, what are you expected to earn this year? It's a very vague, gray question.
It is.
Which is great for consumers that are completing the applications. What are you expected to earn? Well, of course we're optimistic.
Right.
And, what's estimated business revenue? Of course we're optimistic.
Sure.
And there's certain levels of the underwriting team where if you report too high, you'll increase the chance of a financial review. But we've done so many applications, we know the exact data points that have the best success. And
it's like that midway number, is it not? I've heard before where they're like, I've talked to a bunch of people, whether it be like buying a car or whatever. They're like, what's your annual income? They're like, now don't put like $5 million.
Yeah.
But they're like, don't put $100,000 either. There's like a middle number they actually want to see.
Yeah, over 100 grand is helpful for sure.
Over 100 grand, almost like between like 100 and 500.
100 and 250.
100 and 250. Okay.
Yeah, unless you actually make more than 250 and
sure.
and you can show tax returns. Like if you're making 300 and you have the tax return, then put 300.
But
if
you're making 175, you might say you're projected to make 250, but not 450, right?
Exactly.
Okay.
Yeah.
Got it.
Things like that. But just knowing, what information's verified and what's not.
Sure.
It helps. And the banks already have such an advantage. It's I feel like it's time for the consumers to, start taking more advantage.
I agree 1,000,000%. No, I loved what you said about the defaulting. Yeah. Because it makes all the sense in the world. It's like, well, they're cool with it because they expect that and statistically a certain amount of human beings will default, right? Like they're going to default, and they know that. They've been obviously the credit card companies have been in business forever and ever and ever, right?
Yeah.
They know their numbers.
For sure.
So like on
stats.
guys like you and me, they're losing money, right?
Yeah.
But, the reality of it is the bigger picture, objectively, they're making a lot of money because not everybody's going to be like you and me and the people watching right now,
For sure.
Yeah.
And then another thing I just thought about is, we're Americans. We live in the United States. United States has the best lending in the world. There's no other country that has even close to the lending that we have. They don't have 0% interest cards. The UK, they have American Express, maybe one other bank. Same with Canada. Their 0% offers in Canada and the UK are basically non-existent. You go to other countries like Germany, it's like completely non-existent.
Sure.
The US is unique. It has that lending ability, has those 0% interest credit card offers. And so I really think as an entrepreneur or investor, you don't take advantage of the tools that are available to you as an entrepreneur in the United States, it's a disservice to your business or yourself.
Yeah.
As like a business professional. We have these tools, they're ready to use. People are using them and taking massive action and seeing epic results. So, use what's available to you.
I love that. You have to. What would you say the biggest misconception is about credit or credit cards or whatever that you hear all the time? It could be like the 18-year-old thing we talked about a while ago. It could be anything.
A lot of people think the more credit you get, the worse your score is going to be. It's completely false. A lot of people think that if you have high utilization on any credit card, your score is going to suck. No, business cards, you can do that and it doesn't report. That's the big thing that blew my mind from the beginning. Business credit cards do not report to personal credit.
Wow. If you're a real estate agent or a real estate investor, one of my favorite tools that I use every single day in my own personal real estate companies is www.topredata.com. Top RE Data, you can actually get a 7-day free trial, and there are so many different amazing features you can do with this particular software. This is how we comp a lot of our properties. This is how we skip trace a lot of owners, how we get in touch with people, how we identify leads, do all kinds of different research on all the different properties. They have mobile, they have desktop, and there's comprehensive data nationwide, which is incredible. You can do just about anything with topredata.com. You can find divorces, you can find tax defaults, you can literally find any kind of data that you're looking for, get information, get owner information, contact information. You can even automate different things. You can target different things and even build out your entire team with topredata.com. So again, if you're a real estate agent or a real estate investor and you are interested, make sure to go ahead and sign up for your free trial for 7 days at www.topredata.com.
You
Do you have like a business report card?
You do have there are business credit bureaus,
Okay.
Dun & Bradstreet, Experience Small Business, Equifax Small Business. That is another topic for sure. And there's ways to build those scores. And if you have those scores, you're going to get higher limits as well. The business credit cards don't report to either.
Okay.
There's some that do, but most don't report to either. It's quite interesting.
Got it.
The way you build your business credit scores is you get vendor trade lines.
I've heard that, yeah.
So you're buying products from vendors who are known to report that transaction to the business credit bureaus.
Yeah.
And so they'll give you a net 30 account. They'll give you the product. You have to pay them within 30 days. And if you pay successfully on time, they're going to report that transaction as successful to the business credit bureaus. And so once you get enough trade lines on Dun & Bradstreet and Experience Small Business, they're going to give you score. And so when you apply for a business credit card, they're pulling your personal score and your business score. Most people don't have business score, but if you have both, you're just increasing your chance of higher limits.
Sure. Okay.
Yeah.
Where do you check a business score?
Great question. So nav.com. Nav.com is basically it's a credit monitoring service for business credit accounts, and it syncs in the Dun & Bradstreet score, syncs in the Experience Small Business score, and you can see them there. You have to pay. It's like $30 a month, but you can see there.
Okay. Yeah. Awesome.
Yeah.
And the My Score IQ is the other one.
Yeah.
On the personal side.
Yep.
Okay. And that's like $30, I think, too. But you get to pull like every month.
Exactly.
Or there's like a cheaper option, I believe.
Yeah, it's like $30 a month. You get one pull, one report every month, which I recommend. It's good to have. And there's like insurance, like if you get identity theft, it's you want to know, especially if you're active on your credit. You want to know.
I love that. Why do you have so many?
The more you can borrow, the more you can make. I'm
Yeah.
able to invest more, start more businesses, scale more sign-up bonuses, more rewards, building relationships with banks. And when I'm going to be getting, massive loans or tons of different mortgages for, real estate portfolio coming up in the near future, all these banks I'm building incredible trust with. So it's not just about the credit. It's relationship long-term with these lenders. One of the main reasons why John D. Rockefeller, who monopolized the oil industry in the late 1800s, is because he had amazing bank relationships. He was able to raise money from the banks incredibly easy, and that was through good relationships. And so I read his book, Titan, 1 or 2 years ago, and I'm like, wow, that's super true.
I'm going to have to read that one.
Incredible book. I think it's like 800 pages, 700. It's incredible.
Big book.
Highly recommend. It's called Titan, I think. But, relationships, when I'm going for lines of credit, which I'm already working on, I just got like 70 grand the other day from a smaller bank, and that's just based on relationships. So the better relationships you have, the more money you can borrow, more money you can make.
Line of credit is cool. I've got a line of credit that I just got, and what I love about a line of credit is that you have this line of credit that, and I'm probably going to explain it the wrong way, but like, it doesn't cost you any money till you use it.
Exactly.
Similar to like a credit card,
but
typically a lot bigger,
Yeah,
like you
bigger,
get like $1
for
million
sure.
line of credit, 2 million, 3, whatever $1 million line of credit. And you can, like my line of credit, like I could buy a house.
Yeah,
like,
nice.
like basically, you know what I mean? So it's like a hard money loan, but it's a line of credit. I could use it, there's no, like I could just use it whenever I want.
That's great.
Right?
That's great.
Which is really cool.
Yeah.
So your line of credit, like where did that come from? The one that you just got?
No docs, no income verification. Everything I've been talking about is no income verification, no documentation, no tax forms, nothing.
Wow.
It's just an honor system of the application and then strong personal credit and the other kind of things we talked about. But, we're not submitting tax documents. We're not submitting any verification on anything. We just know how to do it otherwise.
Sure.
And when it comes to the lines of credit, there's specific banks that do it no docs, no documentation, and we'll attack those banks. And another strategy that's a very good one is you can file a foreign filing into a different state so that entity of yours can get access to banks in a different state.
Gotcha.
And when we look at our business card locator, the resource that we've created in credit stacking, and it shows every single bank that has a 0% interest business card, all 50 states. So you look at this thing, you're like, okay, I just tapped out all of California. That'd be hard to do.
Sure.
But once you get there, you're like, okay, what other state do I want access to? Okay, I'm gonna do a foreign filing into that state and then attack the banks in that state.
Wow, there's so much strategy. I feel like
So much,
like
dude.
you could just go forever and ever and ever.
It is an insanely fun game.
Yeah,
And credit is a skill. Like it is a lifelong skill that develops over time. It's like, communication. It's just the ability to get access to money when you need.
Yeah. No, for real, dude. I think it's extremely valuable. I mean, like anytime I've ever gone to buy anything with debt, I don't think I've ever been declined.
Yeah.
Because even without really knowing, I've just always built good credit.
Yeah.
I've had phenomenal credit.
I have a good story. One of my good friends from college, his dad was a big Dave Ramsey guy. And growing up, my friend was all about the debit cards because his dad was telling him about the debit cards and how to budget and don't use credit because it's the devil. And he goes out, I think he's maybe 25, 26, goes to try to buy a house. They laugh at him because he has no credit. And I'm like, Chad, I didn't mean to say his name, but this is why you build credit, because you want to be able to do these big purchases when you need, and you need to build credit. And it takes a while. You have to be patient. But if you have strong credit, you can do things much faster. Get money, buy houses, buy cars, get fat loans, invest into things on the snap of a finger. You walk into a business meeting and you have access to money, not even have money, access to money. You're more valuable in that meeting.
100%. Yeah, and you don't need the liquid cash in the bank, right? Like, you shouldn't even, at a certain degree, you shouldn't have a ton of liquid cash in the bank, right? I'm a firm believer in, whatever your expenses are in each particular business, your personal income, have your 3 months, your 6 months, your 12 months if you want, right? But then anything on top of that, it's really stupid to just have a ton of money sitting in a checking account or a savings account for that matter, right? Like, put the money somewhere, do something with it, right?
Use,
Like you said, have access to money. Okay, if this liquid cash were to dry up, well, I've got access to all of this potential cash, right? Which is like the credit cards, or the lines of credit, or the whatever.
And one of my safety blankets, what I talked about, is my personal credit. I have now $90,000 in personal credit limits.
Yeah.
I have some cash in a savings account as a safety blanket. But if I need 80 grand in cash, I can liquidate my personal credit cards and use that.
Wow.
Like that's another safety net. And not many people think about that. And I kind of just realized that like a few months ago that, wow, if I need 80 grand, I can literally snap my finger, run it through a processor, pay a small fee, 3%, and then have the 80 grand minus 3%.
Of course. Yeah, and that number will just continue to go up, I would imagine, for you.
Super powerful.
Yeah, I'm at a point where I've got a lot of personal credit, and I don't even know why I would need all of that money. Like, I'm like, it would really, everything would have to go really sideways, like for me to need that. And at that point, like I got to figure a bunch of stuff out, Nice. I love it, man. So what is your vision now? Like, you wrote the book, you've got your community. What are you doing, by the way, in the community that you have? Is it a course? Is it like an ongoing mentorship? Like, how do you structure all of that?
Yeah. So credit stacking is about learning the skill of credit. We have coaching content. We have 20 hours of course content. We do weekly coaching calls that I host myself that are hour to 2 hours long every single week. We have the Facebook community, which at the moment is just about 700 members. That is one of the best resources in credit stacking because you can ask questions, you can see how other people are winning. It is a very, very engaged and strong community. And anytime you're trying to learn a new skill or you're trying to figure something out, it is so helpful to have the support. And also, like, I know a good amount of credit, but I don't know everything. So even sometimes on coaching calls, people will ask me certain questions, and if I don't know it, I'll say I don't know it, but I'm like, does anyone in the group know the answer to this question? Generally, because I brought so many, people together in this mastermind group, that someone's gonna know because everyone's chasing credit, everyone's learning these skills, they're all doing different things, but we come together and we're stronger because we're together. So that community factor is absolutely massive. But just the course content alone is super powerful. Coaching calls, the Facebook group, my personal introductions to my relationship managers, which is huge. The access to our credit card liquidator, which is huge. Facebook group, and all those resources, the business card locator, the inquiry database. There's a lot of good stuff, and there's 700 people in the group right now.
Wow.
We have great testimonies. Go to creditstacking.com/success. You can see dozens of video testimonies. A lot of good information in this book right here, Credit Stacking. You can find it on Amazon. Really, really good. I really talk about, my story, my progression in business, how I was able to learn to finance different businesses. And I really did that over multiple businesses. Each business venture taught me a different way to finance a business.
Yeah.
And finally, I got to business credit.
Right. That's awesome.
Yeah, if you guys want to learn about credit stacking, how to join the mentorship group, we'll post a link below. You can schedule a call with someone on my team to do a free 30 to 60-minute strategy session so we can look at your credit, figure out the best recommendations for that person, and guide you in the best direction.
Awesome.
But in the meantime, Amazon Credit Stacking the book, great book. It's flying off the shelves.
Yeah, I love it, dude. One last question. What's the future look like for you? What are you going to do next? I mean, you're building this. You got the book. You got all the stuff that you're doing right now. You're going to start more companies. You're just going to build this community even bigger. What's your plan?
At the moment, I'm focusing on growing this community as big as I can. Eventually, I want to start a real estate portfolio. I have not started yet, but I am on my way to building massive purchasing power, and I want to soon use that into real estate. So I'm being a bit patient,
yeah.
But I want to empower as many people, as many entrepreneurs as possible with the education that I have about business funding, because with business funding or any way to increase purchasing power, people can do more. Yeah. And when I started in business, I did not have money. I had like $5-10 grand. And that's how I started in business. And, I'm trying to give people the resources that I didn't have.
I love that. That's phenomenal. Well, mic drop right there. Jack, appreciate you being here, brother.
Thanks, brother. It's been a great time.
What's your Instagram?
King of Debt.
King of Debt. Jack McColl. You got to go get his book on Amazon. Join his course. Join his community. I'll put all of his information down below. If you're watching on YouTube, everything will be down there. If you're listening on Spotify, iTunes, podcast, wherever you're listening, his information will also be down in the description. Definitely go check him out. Go follow him. Leave a review on the podcast. And I appreciate you being on the show, man.
Thanks, brother.
Okay.
Take care, guys. Thanks.
Take care.